Hi and welcome back to 𝗕𝗘𝗪𝗀𝗀. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we think might actually happen next. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at 𝗕𝗘𝗪𝗀𝗀. If you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out? And if you are looking for a little bit more from the crypto space, why not check out the Patreon services as well in the description down below. Okay, let's make a start with this. Here we have Bitcoin paired up with USDT on the hourly chart. Binance is the data source, and boy, oh boy, did things go a little bit crazy yesterday. So let's go and just clear out some of this stuff because I don't need these on here anymore. I'm going to show you how this has kind of played out. Now, following on from yesterday's video, my expectations were that we were first going to go down before we go up to my target range. But instead, the price action just went crazy across crypto. Now, this happened not because of anything fantastic with Bitcoin, and I'll go through some of that in a second, but because the DXY went down. Okay, so what we have to understand is that the DXY, the dollar index, is kind of what is governing price action across these crypto assets and the stock market right now. And this is because we kind of value things like Bitcoin in USDT or USD, right? And or a different currency pair, which is obviously currently pegged against or fighting against the USD. So when the USD kind of pulls back, then you start to see assets go up. And this is not because the assets are doing phenomenally well and there's a lot of buying pressure and things like that that's occurring. That's not so much the case. It's more that there's this intrinsic value to an asset. Although we try to think of it as a USD, it's not really a USD value as such. It's actually an intrinsic value. So what you tend to find is that when the DXY goes down, the price goes up because that value has to be met. When the dollar is worth less, that value of the Bitcoin, for example, has to go up higher. And likewise, it's the opposite way around. If the DXY goes up, then the Bitcoin value has to go down. Okay, so it's all about the value of the asset, not so much the price tag associated with it. And it's an underlying value. This happens across multiple different asset classes. This is not just a crypto-related thing. But we should understand that just because price went up, it isn't actually a really good bullish sign. It's just a sign that actually the DXY went down. And what's interesting about the structure of the DXY is it's actually ready, in my opinion, to start thinking about a surge to the upside, which means that crypto is about to collapse to the downside. Okay, so let's come back up into Bitcoin here. So my expectations to go down were kind of invalidated and we had to run to the upside. So what we can do is we can acknowledge what is going on here. Okay, and that is that we're doing a 3-3-5 corrective structure right at the end here. Okay, so it's a giant ABC, A, B, and C. This is what we're talking about on the live stream for the last few days and kind of the more complicated structures. I've just cleaned out everything in the middle so we can just take a look at what is going on right in here. Okay, so it's a big ABC structure like this. Now, if I grab my fibs and I run this from the top end here to the lower end on this side, and we move it over to this line just here, you can see it comes right up onto this dash line at 20,475. That's going to be the area. And I think we're going to slightly overextend that, which, well, I'd hope we don't, but we'll see how it kind of goes. I've got 5 waves coming down here, and if we do go up higher than that, that's going to put this into a little bit of a question mark as to why this is coming down here. The only other way I look at this would then have to be an expanding flat correction or a irregular flat correction, which, it's possible it's there, but I don't really want that to be the case. If that is the case, of course, it just means that all of this is just very, very messy. Okay, but we'll get into that as those things kind of crop up. So let's talk about this. So over this side here, we have our 3-wave structure here. Okay, nothing unusual about that. Ends in 5 waves just there. So that's all looking good. I'm not too concerned with that. We come down in 3 waves. This comes in here, 1, 2, and 3. Again, that's not a problem. So basically 3 up, 3 down. And then we get into this little area here that currently is, let me grab hold of this, is a 5-wave structure. 1, 2, 3, 4, and 5th that hasn't happened yet. So I still think the DXY is going to drop down a bit more, and that 5th wave is going to go up higher. Now, structurally speaking, I don't like this this little wave one. Doesn't really make sense. And I don't really like how we're currently forming out here. I mean, it's okay, but it's not the best. So let's go ahead and just drill down into that, right? So this wave 4 area, and if we go ahead and just kind of draw these on trend lines, I don't like these things, but they help illustrate the purpose of what I'm doing. We're kind of getting ourselves wedged in, right? People might think, oh, look at this, it's a bear flag or whatever, right? Lots of different names, lots of different kind of ways of looking at it, triangular wedges or whatever. Essentially, it looks like we go 3 down for typical kind of wave 4, 1, 2, and 3, and then we start to move on up. Now, yeah, it gets really kind of tight in this area. Let's go ahead and see what our expectations would be. Okay, so if we were to get this to complete, we would be up here within this 20,519 to 20,689 after we kind of exceeded a little bit there. So essentially that would be kind of the area that we'd be looking for, and that would be our 5th wave if we were looking to kind of complete this. But as I said, I don't like the structure, but at some point you can't really map it down much further. So we're already on the hourly chart, so trying to go down into perfect structures inside these becomes a little bit difficult. But that being said, that's kind of what it would look like, okay? And it would end 20,519. Let's see if I can go ahead and draw that line on there. Okay, and up to a higher kind of range, which would be 20,689. And I'll just see if I can just drop this down a second into this range. And I'll get rid of the fibs. Okay, so that's going to be the area that you kind of expect these things to kind of go into. Now, what that structure is, and this is why we don't want to get too carried away, and I'm going to show you some background data in a second, okay, is that you've gone 3, 3, 5, okay, and that's a type of ABC corrective structure. Okay, so you go 3, 3, and 5. Okay, so basically A, B, and C, and that means that it's just corrective. It's nothing more than corrective. Okay, we also have our 3-wave structure coming down here, like so, and we obviously have this really odd 3-way structure there. Okay, so we come down in 5, which could be an irregular flat if we need it to be. And up here we can see that we have this kind of ABC structure finishing out here. At that point, this is going to come down, okay? That's kind of, you know, given we aren't going to the moon, there's nothing actually positive other than kind of, you know, the DXY going down that's driving the price action here. So when we take a look at our stochastic RSIs, where do we sit now? The daily's overbought, the 8 hourly's overbought, the 4 hourly's overbought, and only the hourly is oversold, meaning that there's just this 5th wave potential before things start to really talk about taking a bit of a nosedive. Okay, now you can disagree if you want. It's entirely up to you. It's just my opinion, not financial advice. I'm not giving financial advice. I'm just telling you that my thoughts on understanding Elliott wave theory, how the structures are forming, what they look like to me, and what might happen next. The DXY is probably going to come down a little bit more. Now, you can't really do 5-wave structures on the DXY, but if you were, it would look like that, right? So the DXY has got to come down a fraction more. Also, from an oversold point of view, you can kind of see that things are going to go up, right? So it's the opposite to that of Bitcoin, okay? Bitcoin's overbought on the daily 8-hour and the 4-hour chart, right? But the DXY is not, okay? The DXY is going to come down whilst Bitcoin goes up, and then essentially it's all going to go up on a DXY whilst Bitcoin goes down. Okay, so those are the two things that are opposite. Now let's talk about why I think that actually there is not that much positivity that sits in the background data for this recent move, and why I think it is all DXY driven. So let's go ahead and bring up this. Okay, now these are the wallets that we talk about every single day, and I'm going to talk about day-on-day changes. But before we get into the wallets, I want to take a look at this. Okay, so we have to understand that price movements and price is normally controlled by supply and demand, right? If there is surplus supplies and there's just too much supply, the price goes down. And when there is a shortage of supply, the price goes up. Of course, the demand would have to also be there or not be there in those scenarios. So demand and supply, or supply and demand, they're absolutely everything. So what do we see here in the last 24 hours? Well, we see the lines are pretty much just the same. We had 38,000 coming off of the exchanges with 39,000 going onto the exchanges. So this is the thing that we need to get our heads around, because it turns out that there was actually more supply than there was demand. Okay, so if we think about the Bitcoin coming off the exchanges as the demand and the inflows being the supply going on, becoming available to sell, more was available to sell than was actually purchased. Therefore, the price should have gone down, not up. Okay, but the DXY dropping the way that it has done has pushed the price up because of the underlying value of a cryptocurrency asset, not because there's actually a lot of adoption or a lot of demand for the asset itself. So it looks like, and it appears to me, that essentially what's actually been going on in the last 24 hours is just purely DXY driven and is not a relationship between supply and demand. Now, as I come over into the shrimp wallets or the 𝗏 and the dolphin wallets, for example, you can see that these are relatively flat at the top here. So the 𝗏 are not really accumulating much. Day on day, they kind of go up about 67 wallets. Which is actually reasonably small. The dolphins have been shaken out a little bit here in the last 24 hours as well. The whales, if we come and have a look here, you can see that they came down out of the sharks. The whales, tiny little uptake, and no change here with the krakens. So essentially the price went up, but it hasn't really been shown as any decent inflows or outflows. We've seen some people getting shaken out of the space. We've seen a little bit of accumulation, but nothing overly exciting. Nothing that's going to get us thinking that Bitcoin is going to the moon, cryptocurrency assets are going to the moon. To me, it just looks like the DXY went down, cryptocurrency went up, and as a result, you're looking at different values or USD valued based Bitcoin, right, slightly higher in the charts. All that being said, I think the DXY is really on the cusp of a bigger move to the upside, and I think that's going to bring the price of Bitcoin back to the downside. And obviously, during those moments, we'll have to see whether or not we have accumulation or basically people just dumping it on the market or not. Okay, so essentially, this is kind of where things are sat at the moment. It looks like things got really, really impulsive to the upside, but a little bit more to the upside, I think, is going to be required here in order to really kind of balance things out. So I'm thinking between 20,519, 20,689 to kind of be complete. Maybe it'll slightly overextend if we end up with full 5 waves within there, kind of overextending in itself and all that kind of stuff. But for now, that is kind of my expectations here on BTC. So I am going to be out of the office for today, but do join us down in Discord. We've got more technical analysts down there. We've got 𝗕𝗘𝗪𝗔𝗡𝗏 and 𝗕𝗘𝗪𝗏𝗠 down in the Discord server. Chris is down in the Discord server, and I've got a fantastic moderator team down there as well. So any questions, feel free to answer them down there in the Discord server, and we'll try to get back to you as quickly as we can. Other than that, have a fantastic day, guys, and we'll catch you all in the next one.